Hello traders, welcome to today's US Open live webinar. It is Tuesday, March 26th, 10 minutes before Wall Street opens. As always, I am your host, Nikos Zabouras, Senior Financial Editorial Writer at FXCM. A bit of a slow start to the week after last week's central bank bleeds. Today we're going to focus on the surge of the UK 100 stock index after the Bank of England outcome. We're also gonna discuss about updates on the Euro USD and the Nasdaq 100, and I'm also gonna comment on Apple's outlook after the new challenge to its business model following the lawsuit from the US authorities for anti-competitive prices. And I also want to talk a little bit about Xiaomi, the Chinese smartphone makers who makes its foray into the electric vehicle markets in what could pose a significant opportunity for growth for the company. Before, however, we begin, as always, please read carefully through the risk warnings and the disclaimers. Once again, please go over the risk warnings and the disclaimers carefully, and please bear in mind that anything discussed in these sessions does not constitute investment advice and should not be construed as such. Okay, having said that, let's get the ball rolling. We're gonna start off with the UK 100 index, which rallies after the Bank of England decision last week. Then we're gonna discuss about the euro dollar and the Nasdaq 100, and then we're going to move on to Apple, whose walled garden business model is coming under siege. And we're also going to talk about Xiaomi, the Chinese smartphone giant, which is making its entry into the electric vehicle market. Okay, so we already have the UK 100 index on our screen. That's what we're going to start off, as I said. You can see that the index rallied last weekend, now moves, closes in on its record highs at 0,052, and this surge came after the policy decision by the central bank, the Bank of England, which in itself came just a couple of days after we saw a significant deceleration in UK inflation after a period of stubbornness. So the Bank of England appeared to be getting more comfortable with prospects of lower rates. It kept them steady last week, but no member voted for a hike, from two in the last decision, and one member again favored a cut. Furthermore, Governor Bailey embraced market pricing of 2 to 3 cuts this year, speaking of Bloomberg after the decision, saying that it is reasonable for markets to take that view, that of 2 or 3 rate cuts. As we said, the UK 100 reacted positively to the news, posting its best day of the year, and now trying to tackle the record highs from around a year ago at 8,052. However, inflation is still far from the 2% target, and the central bank does not expect it to hit that target until 2026, despite projections for it falling temporarily to that level in the next quarter. Governor Bailey acknowledged the encouraging signals around price pressures, but noted that policymakers are not yet at the point to cut rates. Um, the index is already consolidating its rally, and we could see pressure back towards the 38.2% Fibonacci, the dotted line that you see on the chart of the last leg up, the March um low high rise. But sustained weakness past that level has a higher degree of difficulty, and a break below the 200 period EMA, the black line that you see on the chart, does not look easy under current conditions. Now let's move to the euro dollar. It dropped last week despite its post-Fed advance. The US central bank maintained a cautious stance around removing monetary restraint, but reaffirmed its projections that imply 3 rate cuts this year, despite raising its inflation and GDP forecast, which is in itself dovish. So that's what caused an initial increase in the pair. However, we then saw that unraveling, and the pair ended last week with losses because essentially the ECB, the European Central Bank, is also moving towards a pivot, and chances for a June cut are rising. As we've said before, monetary policy differential is inconclusive, and this reflects on the euro dollar. Now, below the 200 period EMA, there is room for lower lows, and although a breach of those of the year at 1.0694 definitely does not look easy under current conditions. On the other hand, we're seeing a rebound this week, and the common currency tries to return above them 200 period EMA, which would shift immediate bias on the upside and would keep the 1.1017 resistance in play. However, given this inconclusive monetary policy differential that we talked about, we do find it hard to see strong moves in either direction. And in any case, at the end of the week, we expect the PCE inflation update from the United States. And with 2 minutes before the US session begins, let's talk about the Nasdaq 100. Wall Street in general, all index rose to new record highs after the Fed's decision last week, which we already talked about, along with soft landing conviction and AI optimism. Bulls have the ability to challenge the 19K mark. On the other hand, we could see a worsening in sentiment due to the new episodes on the Sino-Western tech trade front. The Financial Times reported that China blocks Intel and the use of Intel and AMD chips on government devices in this latest episode in this trade war. And we could see a pullback back towards the 200 period EMA, and then there's the March low following. So although we could see such a pullback, a strong catalyst would be needed for further losses, and in any case the downside appears well protected. And now I want to talk a little bit about Apple and Xiaomi. Let's start off with the US tech giant, which is definitely going through a tough period this year. As we have said before, we've covered developments closely. There are various threats to its dominance and a lack of growth. The latest challenge comes from the US Department of Justice, which sued Apple for illegal monopoly over the smartphone markets. This complaint threatens Apple's entire business model that is often described as a walled garden. Apple's main strength is its sticky and closed ecosystem, where its products and services work very well between them. offering an unmatched and seamless experience. But this creates a mode that users can't easily escape if they want to, and it's hard to switch to other ecosystem, and that's why what the DOJ is targeting essentially. For example, if we look at it at Apple smart watches, they don't work with non-iPhone smartphones, at least not without losing some functionality, and vice versa, of course. This year again, Apple was also forced to open up its App Store in the European Union uh, to comply with the landmark legislation there, the Digital Markets Act, which changes the way distribution works and lowers its lucrative fees. So this poses a direct threat to Apple's revenue stream. These actions by regulator can undermine the tech giant's top and bottom lines at a period when it already lacks growth, as we've said before. Of course, there are many problems. We've talked about the lack of innovation. We've talked about problems in China where its appeal seems to be diminishing, and we're seeing how CEO Tim Cook tries to hold the fort there and visit China again last week. Of course, these difficulties show up on its stock. It loses significant ground this year. It's already in correction territory and threatens with lower lows. You can see this support area which has held before, but a breach could lead it below 160, which would enter bear market, which is generally defined as 20% of a recent peak. This would be 20% from its record highs at the end of the previous year. And of course, another big challenge is artificial intelligence, where the company seems to lag behind competitors like Samsung and other tech giant. Of course, as we said, this region right here could help put a floor and could give the opportunity for Apple stock to return above the 200 period EMA, which would pose the bearish bias, but a catalyst would be needed for that. And the stock is currently vulnerable. On the other hand, Apple remains one of the world's most valuable companies, and it's hard to see how investors would turn their backs, even if there are problems. And this pullback is always in stocks like Apple. This is always seen as an opportunity to buy from many investors. So this could support prices, but there's definitely risk for a bear market. And now let's finish things off with Xiaomi. This is a Hong Kong listing Chinese company. It's the third smartphone maker by shipments globally in 2023, behind Apple and Samsung. It posted strong quarterly earnings last week. Revenue rose around 11% year over year in the fourth quarter, and adjusted net profits nearly tripled in the same period. What I want to focus on, though, is that the firm is moving beyond its robust lineup of smartphones, wearables, and smart home appliance, and now pushes a broader human car home strategy, as it calls it, and that includes electric vehicles. It has already unveiled its SU7 all electric sedan and expects to begin deliveries this week, likely at a price below the Tesla Model S. And of course, Xiaomi plans to expand its lineup, although we don't have any roadmap at this stage, but it aspires to become one of the top 5 global automakers over the next 15 to 20 years. During the last earnings calls last week, its president said that 2024 will be a very important and memorable year for the company, and spoke of a steady and aggressive strategy for the current year. And of course, with the smartphone market poised for a recovery after the contraction of the previous years and its entry into the electric vehicle market, there is definitely there are definitely reasons for optimism. Technically, Xiaomi has the opportunity to break fresh ground above the 17 mark. That's Hong Kong currency, of course, but we're still a bit cautious around further gains and sustained gains past this level, given that the RSI is moving towards overbought conditions, which can contain the upside. So we could see a pullback below the 200 period EMA, although some catalyst would be needed for that, and daily closes would shift bias on the downside. In any case, we'll be waiting to hear more from Xiaomi, exact pricing, EV roadmap, and more. So that's pretty much it from me for today. We're going to talk again on Thursday at our usual time slot, 10 minutes before Wall Street opens. And there we're going to talk more about the PCE inflation update from the United States, which will be due on Friday. That's it from me. Thank you for joining me.